Hello and welcome to this Forex Preview at XM.com. I'm Maria Bashardis, and joining me is investment analyst Marios Hadjikyriakos. We'll be discussing the outlook for the Australian dollar. So Marios, the Aussie has clearly been the victim of the US-China trade war so far, and the Reserve Bank of Australia has cut rates twice this year and may do so again. What data releases are due out this week, and how do you think they'll affect the Aussie?
Well, like you very correctly pointed out, we've seen the Aussie effectively suffer some collateral damage at the hands of the US-China trade war. So not only do the escalating trade tensions paint a darker picture for Australia's export-heavy economy, but they are also making the Reserve Bank of Australia cut rates more aggressively so it protects the economy. So it has been really a double whammy of weakness for the Aussie, which is currently trading near 10-year lows. Now, as far as next week is concerned, we're going to get the capital expenditure data for Q2. This will effectively be a proxy for the second quarter GDP, which is coming out early next month. But as far as how the Aussie might respond to this data, I think that the risks are tilted to the downside. So if we were to see this data come in exceptionally good, so stellar, the market could brush them aside as being outdated. So they refer to the second quarter, that was before the trade war escalated. So even if the situation was good back then, it might not really be as good right now. But on the other hand, if we were to see some disappointing data, that could tell the market, oh, the situation was already deteriorating before the trade war escalated, so now it may be even worse. So I think that the risks surrounding the Aussie from this data are tilted to the downside.
Okay, and beyond this week, would you say the outlook for the Aussie is bleak?
I would say that actually. So we have the possibility of the US-China trade war escalating further, which I think is inevitable at this point. Trump just hit China with new tariffs. China is almost certain to retaliate, and we'll see where it goes from there, but it looks like it will escalate even further. Now, that could make the RBA even more aggressive. So the Reserve Bank of Australia has recently been discussing the possibility of unconventional policy tools. So negative interest rates, quantitative easing, things that have been employed in other economies, but Australia never tried out. So if we were to see the trade war escalate, that could make the RBA more vocal about potentially using this kind of policy tools, which would be a further negative for the Aussie. Now, here's the small caveat. The US dollar also responds negatively to trade tensions. So if we were to see a further escalation, any Aussie weakness may not be that visible in Aussie dollar. It may be much more visible against the yen, for example, or against the Swiss franc, so safe haven currencies.
I see. Marios, thanks so much for joining me, and thanks for watching at XM.com.